Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys how does the averaging concept work. Like how does the averaging works how really does the averaging work. So in this video I'm going to be showing to you guys how does the averaging work. So let's get started with the video. Now let's say you have bought now again the same example. You bought a shares of company A at this point at point sorry of a company at point A, and then the stock price decreases in value, and then you have bought the stock again at point B. So these are two different levels. This is $10 a share and this is $7 a share. So you bought 10 shares at this point and 30 shares at point B. So both of them have different concepts, and you can apply those you can apply those at different levels. So you can see now these are two different levels, and at these points you can apply your averaging method carefully. So here the averaging concept works in this manner, that when you have bought 10 shares at A and 30 at B, so the overall decline you're seeing here, the overall negative sign that you will see in your unsettled unsettled PNL. So it would generally turn into positive sign, and then would appear in this favor, in favor of point B. So generally the same example again. You bought $10 a share, 10 shares at $10, so this equal to 100. So generally, and at point B you bought at $7, 30 shares at $7 per share, so this equals to 210. So now at this point, when you calculate your total profit, so at this point you generally see that the overall shares price would be in this favor. So in the last video I made a mistake, that I did 7 plus 7 plus 3. So this is not the correct method. Now I'm going to show you 10 plus sorry 10 plus 7. Yes, it's generally this method, divided by 2, 8.5. So its total price would be 8.5 of 40 shares of 40 shares. So now we would see how much. In the last video I made this mistake, I did all the calculations wrong. So now it is correct, and just take a look at it how it is done now. So 8.5 multiplied by 40, 340. So it is 310, so it would generally come as 340 for 200 shares. So no, wait, 10 multiplied 10 and 210, so it's 310, and this is 340. Let me calculate it again. 8.5 multiplied by 40 shares, yes, 340. So it would be this price and 30 shares. Now let's do 30 multiplied 7, 210 plus 100, okay, 310. So this total equal to 310, and this is 340. Maybe some up and here. So again I might be calculating here wrongly, but the overall price doesn't change. So at these points the overall prices doesn't change. It's just the concept, like it's just the total price that would appear right here, and all of that appear right here. Don't worry about it, you won't lose any of your money. Rather than you would gain by applying this strategy. You will gain more by applying this strategy. So do not be afraid of these. I might be calculating wrongly here, but you won't lose your overall balance at these points. You would generally make more by only by applying the right strategy. You generally make more by applying this strategy at the right time. So you'll have a great just know the great entry point, recognize a great entry point, and from that entry point you would make more money. Do not worry about or do not get distracted about these numbers. These might be, I've done my calculations wrongly. So all of these, do not worry about it, and you would see that by so this is how the averaging concept work. you just have to like I'm just calculating it right here. So the calculator, the sorry, the what do you call that, the app that you're using to trade stocks, that would calculate these, all of these for you. You wouldn't have to calculate all of these will already be calculated for you, so do not get hesitant about it. If you're not good at math, do not be hesitant about it. These all would be done in your calculations in your app that, on which you are calculating your stock, so on which you are buying and selling your stock. So do not be afraid about using those. So this was the all of the concept of how the averaging concept work. It's generally is basically a great method to use, because you can use it, you can apply it at different points in the stock market, and it's also a profitable, it's also as profitable. You can see that how averaging works. Generally you wouldn't lose any money, but all of that all of those are different points at which you have bought the share. All of those will be calculated into one, and it will show you the total amount at which you have bought. And from that on, when the share price decreases in value, it would show you a loss, and if it would increase in value, it would show you a gain. So again from that point, so generally the overall buying price would also decrease as you buy more shares at a lowest price, so it would be close in that favor in the share that in the shares that you have bought more. So generally in the beginning, try to apply the right strategy at the right time. Do not go like in this method that you buy a little at one price and more at another. So do not use this method, do not use this type of method. Generally you apply the shares at the lowest price from the beginning, like applying again and again. That's not a strategy, that's not something that I would consider. I would consider that I apply a more, but again, if you're in the worst case scenario, you can buy at a lowest price. You can use the averaging concept. It is a great concept and you will benefit a lot from it. So, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.